and welcome to the Tear Sheet Podcast, where we explore financial services together with an eye on technology, innovation, emerging models, and changing expectations. I'm Tear Sheet Editor-in-Chief, Zach Miller. And the credit industry is shifting how it evaluates borrowers, and something we're covering a lot here at Tear Sheet. Traditional credit scoring has left over 1 billion people without access to financial services, but lenders are increasingly turning to alternative data, whether that's bank transactions, spending patterns, real-time financial behavior, to make more informed decisions about credit worthiness. Andrew Endicott has been at the center of this shift. As co-founder of Petal, he pioneered what they called cash flow underwriting, using real-time bank data alongside traditional credit reports to approve people for credit cards who would otherwise be turned away. And the approach worked. Petal raised nearly $1 billion, proving that alternative underwriting isn't just better for consumers, it's good business. Now, as co-founding partner at Gilgamesh Ventures, Andrew is investing in early-stage fintech companies across the Americas. Today, I hope we'll explore how the alternative credit movement has become mainstream, what he's seeing as an investor heading into the rest of 2025, and why the Americas represent his next big bet in fintech. Welcome to the show, Andrew.
Thanks, Zach. Really excited to talk with you.
As well. And I remember covering the Petal launch in those early days, and that was just a rocket ship right out of the gate. So why don't we start there? Why don't we talk about, your background and how you got to where we are today?
Yeah, absolutely. I've kind of come to where I am from a couple different directions. So I kind of began my career kind of in the midst of the financial crisis, which today is becoming less and less relevant to things.
It's sort of how we mark time in finance, which crisis in front or behind you are. Yeah.
It is. Yeah, absolutely. So I began my career then, kind of couldn't really get a job out of college. So I decided to continue going to school. Went to Harvard Law School as a result. I spent my 3 years there and then moved to New York. And I was a corporate lawyer for a while. Had to pay off my student loans, which was hefty. Really enjoyed that. But I didn't really enjoy the fact that lawyers didn't get to make decisions. And so I wanted to be a decision maker. That was important to me. So I left the legal profession, dropped my bar license, spent several years as an investment banker, really at the beginning of kind of what we'd call fintech today. I worked mainly with specialty finance companies and non-bank lenders at the time.
We didn't call it fintech back then, did we?
Exactly. Yeah. It was, I think most people call it specialty finance or other things. There really wasn't a standard, but did that for some time, built a network, started to see some interesting trends. It was a pretty interesting time, and then spotted the opportunity that eventually became Petal and teamed up with a good friend from law school to build it. Left my job. It was a little bit before it was quite as common to jump out and start a company as today. You didn't have quite as many stories, as much infrastructure, but around 2015, 2016, started Petal, and then spent most of the next decade building it. As you said, in the kind of the lending and the alternative data, alternative credit space. Learned a huge amount. I'm sure we'll talk about it some, but had the experience of starting something from scratch and continuing, and we eventually exited the company several years ago. And ever since, I've been focused as an investor in the thing that I have come to learn, fintech, with Gilgamesh Ventures and my partner Miguel. We invest in early stage fintech companies at the seed stage primarily, but also things around that, pre-seed and seed-ish, as I call it. And we do it globally. We invest a lot in the United States, but a lot outside the United States as well. Big emphasis on Brazil and Mexico in particular. And we're really looking for opportunities to invest in people that are going to build the next, kind of the things that define this wave of innovation that we're in today, which is, in my opinion, distinct from the wave of innovation that we were in kind of after the financial crisis. It's become different. Things are a little more fresh now than they were probably 5 years ago. So it's an exciting time to be where we are.
Thank you for that intro. Why don't we take it I want to take it post Harvard Law School. Like, when you hit on the idea for Petal, you said it's an idea that eventually turned into Petal. How did you know that was the idea?
Yeah, it's tough to really pinpoint, kind of where a company starts. I mean, you can go back, right, and there's a little narrative bias, I think.
Sure. It's how you tell the story.
Exactly. I've been fascinated by credit for a long time. It's something that I just find interesting. It's a complicated topic. I think whether we need more credit or less credit sometimes is an object of debate. In the United States, it's not straightforward, but it is very important. And going back, to when we were starting the company and before that, it was apparent, and it's been apparent for a long time, that the way that we underwrite credit traditionally in the United States is not perfect. It's pretty good for people that have very established track records in using credit. So somebody that has paid their bills for a very long time, or somebody that has not paid their bills very often for a long time. For those types of folks, it's pretty obvious kind of how using traditional tools of underwriting, how they should be treated, how you price it, whether you want to approve somebody, and so on. But there's coming out of school and beginning my career and meeting a lot of people who are my friends and others, I knew a lot of folks that had problems that didn't really make a lot of sense. As far as
you could have taken an approach that goes like a more traditional approach and kind of tweak or optimize the existing way of doing it versus doing what you did. So like, I guess I'm kind of curious what it was that you saw that said, hey, this whole thing is broken. I want to come up with an alternative way of doing it.
Yeah, so I had a really good friend named Burke who actually also co-founded Petal with us, who'd come from another country. He'd come from Switzerland. He had all these amazing job offers and internships, and this guy was going to do financially well. It was kind of obvious. Yet him in particular, he was this edge case for underwriting credit, where you didn't have any history because he came from Switzerland, and not been the case had he been born in the United States, it would have been a much easier decision to underwrite him for credit. And the FICO, bureau information, all this stuff is not going to fix that. You have to take an alternative approach. And the biggest and best source of really signal in the financial system that was available, and I think still available today, to make those decisions really is the information in your bank account. That information is very fresh. It's updated constantly. You get to see tons of information about how you're making money, spending money, saving money, all these things. And that data is populated much more quickly and more democratically than credit bureau data, which is slow and depends on taking very specific actions that not everybody takes. And so that's really what motivated the initial kind of run at using this very rich alternative data set to underwrite credit. Now, when we started the business, we didn't initially see that we were going to be underwriting credit cards. We actually wanted to sell the credit score to other people, which that today is its own business, and my co-founder runs it, named Prism.
Prism, right.
Selling cash scores to lenders in the exact same way that we use them at Petal. But initially wanted to do the scoring, which is kind of what's happening today.
It's almost like you needed to prove the model with your own money at risk to be able to sell the data afterwards. That happens a lot in fintech, it looks like.
That's right. Yeah. That's exactly right. So we had to prove it out, and to do that, you had to build a lending company. And so we did that. And it's so we stood up and built a credit card company, which is no easy task if you ask anybody who's done it. But that also took off, and then we spent, like I said, the next decade building that and raising capital, building relationships, assembling a really amazing team to build that business, and it achieved pretty significant size. We were around the time we sold the company, we're doing over $100 million in revenue. So there's something very clear that resonated with the market and with consumers.
What were some of the biggest hurdles in those early days? I mean, I guess you started around the same time some of the data aggregators were getting, like, was getting at the data a big challenge then? And then obviously, making sense of the data, finding the signal and noise, I guess. But like, what were some of the bigger challenges, I guess, in the early days?
Yeah, I think one that'll be interesting to folks doing this today that really is different is there wasn't nearly as much infrastructure when we started 16. You didn't have all these kind of fintech friendly, kind of processors and just various counterparties that are required to launch a credit card company. They kind of didn't exist, or they weren't as easy to access. That was one major obstacle. And there are elements that today there's a credibility gap that you have to jump to launch a company like Petal, which is very similar to a bank. You have to convince a lot of people that you're going to be around in 6 months. And that's hard. That comes down to your team. It comes down to your capitalization and kind of your other elements of like just seeming stable. So all of that was a big obstacle. I think as we launched the product and we really started, kind of fighting in the trenches every day with go-to-market and customer acquisition and so on. I mean, the biggest thing that I really that sticks with me from then was really dealing with fraud. Fraud is such a complex topic. You can spend hours talking about it and kind of only scratch the surface of what's happening. It changes constantly as well. The people that are committing fraud, in the economy, particularly with financial products, are probably some of the smarter people out there.
Exactly, and they never sleep.
They never sleep, and you have to get it right every time. They have to get it right once. And all this today is becoming so much more complex with artificial intelligence. But even before that, the sophistication of the kind of the bad actors that we had to deal with was significant. Particularly once we started achieving some scale, the sophistication of the attacks that we would receive from pretty organized sources was really severe, and we lost money doing it. And you had to change things that you didn't want to change to be able to combat it. Something that I really believe is at the end of the day, most financial institutions, most financial providers want to have a good product. If you lived in a perfect world, they would all dedicate a lot of attention to making the consumer happy. They would make things easy, so on and so forth. These products are hard to use and uncomfortable and kind of cumbersome a lot of times because of other problems. They often, because of fraud, because of regulation, particularly anti-money laundering regulation, or just prudential regulation and trying to really avoid risk. All these things cause financial actors to put in a lot of roadblocks, particularly from the consumer's perspective, into their product and to make things harder, which is really unfortunate. It's
such a drag. It's like a tax on the whole industry. Yeah.
It is, but that's actually where the innovation is. And your ability. So with Petal, we wanted to underwrite credit better. We wanted to assess risk better using this cash flow underwriting, and that was something that no one had really done. It was when, like you said, when Plaid was kind of really coming out, we were able to leverage that new technology of bank aggregation tech to see this financial information that had never really been used. And because of that, we were able to serve a lot of people for which there wasn't this risk data. But there's all kinds of other examples too on the anti-money laundering. There's a lot of really fantastic companies that are doing great things to be able to comply with the regulations and also to make it easier for the consumer, make it easier for the financial institution doing it. And with Gilgamesh, we have some investments in that space as well. But so kind of going back, challenges with launching Petal, I think fraud was really one of them that we had to grapple with. Last one I'd say, and this is not so much at the beginning, but it's something that very much became the case as we grew, is you have this challenge in fintech, particularly in the lending space, of marrying innovation and people that are doing new and different things, marrying that with people that know how to avoid pitfalls and have industry experience and can keep you out of trouble. Those are two very different talent pools, two very different cultures, and getting them to work together is often hard. And I think your great entrepreneurs do this really well. They kind of make it seamless. Renaud Laplanche, I think, is one of those that's done pretty well with this. Getting those cultures to be productive and to not waste a lot of time on kind of just these cultural battles within a company is really difficult. And so that's something that as an investor we talk to our companies all the time, that you have to have both, but you have to find ways to get those people who are both right about how things should happen, get them to work together and kind of to get past these stumbling blocks as far as how the company ought to be run is something that's really, really significant.
That's a great point. I appreciate you pointing that out. And I think it's a good segue to talk about Gilgamesh. So I appreciate also the way you presented Gilgamesh. And so it's early stage. It's U.S., but it's also there's a focus on finding some of the best opportunities globally. I'm kind of curious, like check size. Like, can you share with a little bit, like I guess how big you come in, and are you looking to stay with the companies for longer term, or is it pure early stage? Are you doing follow-ons?
Yeah, so we're like I said, we're investing typically at the seed stage, so that usually when companies are raising several $1 million, 3 tends to be a sweet spot. We're typically putting in about $500,000 into those rounds. So we're usually the second largest investor in a seed round. That tends to be where we come in. And as a result, we have really friendly relationships with all the lead investors, and we, they look to us for having some expertise in financial services, and that's what we understand in fintech. And we love, conversely, that when we like a company, when we really see we have conviction and we see opportunity, we love to get in early and then kind of pull investors to that company, the bigger investors. That's something we really love to do. It's fun. It's where investors and founders are amazingly, kind of aligned and on the same team.
Exactly. You're actually actively helping the company to grow and survive. Yeah. That's pretty cool.
Exactly.
Yeah.
Unfortunately, when you're an entrepreneur and you're raising money, it often does not feel that way. So anyway, we're investing at seed stage, and we do follow on into companies. As companies grow, as they raise a Series A and so on, we like to invest more in those companies. We reserve a chunk of our capital to do that, and we're in it for the long haul with businesses. Want to help them to really achieve great successes. And we pride ourselves, Miguel and I, one of the things we really try to do is we don't want to be kind of the boring, kind of slow moving fund that's just wants reports and kind of talks to you every once in a while and nothing happens. We like to get in the trenches with people. We want to help in tangible ways. We want to help build relationships with banks, with lenders, with processors, to help recruit, fintech specific talent like chief risk officers, general counsels, CFOs. Those are things we care about. And then Miguel, he has tremendous relationships, in the media space, which he does a podcast as well, the fintech leaders. And kind of helping people to reach, that ecosystem as well ends up being something really important to what we do as well. And so we get in early. We stay late. We want the companies to succeed, and we want to be really aligned with the founders, which is pretty easy when you're that early of an investor. There's not as many conflicts as there are for later stage investors.
Totally. So Andrew, what I'd like to do is maybe pull 2 or 3 themes out of the existing portfolio.
Sure.
And then after we talk about those, and you name the companies, I know it's hard because you love them all, but if you can name the companies, that would be appreciative. And then maybe we can talk about where you're investing now and what you're looking at into the future.
Okay.
Yeah.
Cool.
So start with today, the existing portfolio. Yeah.
Yeah. So you just want me to pick a couple of names to talk about, or themes?
I'm actually more interested in the themes and the names that relate to themes, but are there certain themes that cut across a portfolio that you find some clustering?
Yeah. So I mentioned the idea of companies that are helping, companies that are helping financial institutions and fintechs to manage these kind of just challenges of being in the financial space, anti-money laundering, fraud, and so on. That's a place we're really excited about. We have 2 major investments there. One being Base Layer, that's in the United States, focused on B2B, KYB. So know your business,
right.
Money laundering and fraud avoidance. That company's been growing really fast and helping a lot of companies to really accelerate customer acquisition, to smooth onboarding, and just to make things easier for everybody. We also have another investment globally named Neva, which is doing similar things today in Mexico and expanding into other markets like Brazil to help kind of in a very different setting, different jurisdictions to manage very similar problems. So that's a thematic bet of the company for the fund that we're pursuing. Another one, obviously, is artificial intelligence. I think that this is something that's kind of cuts across the entire economy today. Sure. Bit of an obvious one that's something that we're interested in, but we've made several investments in artificial intelligence in financial services. It's kind of rejuvenated kind of the way that financial services may be delivered in the future, and so that's something that we're really excited about. And it cuts across from kind of neobanking to lending to all kinds of basically SaaS products are being rethought with artificial intelligence, and so that's something that spans everything we're doing. We have expertise in some of these. Kind of my background in lending is something that's I think a particularly deep area with us as a company, and we have several large investments in that space. One being Nexu in Mexico. It's an auto lending platform that radically accelerates the speed to purchase for auto purchaser in Mexico and helps dealerships to sell significantly more cars. It's a platform for the dealerships, and then it connects kind of the actual sources of capital for the loans to buy those cars. So that company's growing magnificently and is profitable and doing really great. And another one is Zeppelin, which is based in Chile but is expanded in Mexico. It's really kind of a office of the CFO helping companies manage their working capital and payments in the B2B space. And so that company has been growing very quickly. And Nexu and Zeppelin illustrate the focus on the Americas that you mentioned earlier. And the last one I'll mention, we've made some investments also in B2B marketplaces, which is, you're not hearing about that as much as you were probably 2 years ago, but it's a powerful business model, particularly in B2B, in our opinion. And we have an investment in Brazil, Cayena, which is in the restaurant supply chain space. Mm-hmm. So connecting suppliers to restaurants and managing the payments and the procurement, and also the working capital of both sides of the marketplace there. That company is growing very quickly and just raised some additional capital as well. I mentioned earlier that right now, it's today compared to 3 years ago, there's a lot more kind of just macro activity in fintech. I don't know. I don't really check whether that's appeared in the data as far as the amount of investment in fintech, but there was probably 3 or 4 years ago, the number of ideas that were financeable was beginning to narrow because you had these big winners, whether it was SoFi or Affirm or Bill.com, you name it. There were kind of pieces of the pie were being carved out and kind of were off limits. They've been taken. Today, the pie has been completely rebaked and everything is up for grabs. And so it's a really interesting time to be investing where you can really almost kind of think like a child and say, like, why can't we do this better? There's a good chance you can't today. And that's more the case than it was a couple of years ago. The last thing I'll mention on trends is around, it's getting a lot of attention right now, stable coins. Mm-hmm. So we're seeing a lot of activity there. And I think that's a place that we have a belief that in 10 years, that'll be a very important part of the economy. And we're likely to make some investments in that space as well. So, but there's a lot of things going on right now.
Yeah, that's awesome. And I just one point that you made, which was like, the pie being reassembled, rebaked, I think was the word you used. There comes a time, I think, in every cycle where like the previous winners become the incumbents to an extent, and yes. And then opportunities open for new companies to come in to be able to take share. I want to go back to the first example you gave, which was the KYC, KYB, AML space. Yep. And it's not a space we cover a lot. We cover a lot like the front end part of financial services, so like product development and stuff like that. Obviously, keeping the bad guys out is a really important part of that. But why is it? I guess I know it's you qualified the problem that it's a huge problem. It's only getting worse, especially with AI. Yep. Where are the opportunities? Why aren't the existing solutions sufficient, I guess, to fight that?
I think they're hard problems. Mm-hmm. They're hard for a lot of reasons. There's a lot of data problems. The regulatory requirements are quite difficult to comply with. If you look at Chase or you look at Citigroup, and this statistic may be dated, but a truly obscene amount of their headcount is dedicated to compliance, and the vast majority of that. I read
once it was like 30% of the headcount, something like that. Yeah.
Right. And the vast majority of that is dedicated to money laundering. Mm-hmm. And it's an incredibly labor intensive task. It's hard to do. If somebody's trying to launder money and they're trying really hard, there's a lot of ways they can mm-hmm. hide things, and the same thing is true of fraud. And so the sophistication of the problem that you're trying to prevent is quite significant. As a result, the sophistication of the financial institution to address that problem and indirectly the sophistication of the tools they're using need to be great as well. Artificial intelligence has enabled a lot better products with this. Mm-hmm. It's stripping out the human in the loop for a lot of the easy cases, mm-hmm. allowing teams to focus on really the challenging places or where there's a lot of risk. You can see things like this. I think Palantir in very different settings does similar things of really using powerful machine learning, mm-hmm. LLMs, things like that to allow you to focus on the big problems. And conversely, that quick decisions for 99% of those data points means that everything's a lot faster. Everything's a lot easier. Mm-hmm. It means you don't have to have these. Chase is not going to need a third of their company doing this, which, if you go back 100 years ago, a third of their company wasn't doing this either. It's really a creature of the modern world that's happening. So I think the other thing I'd add is like it's not a structured data problem either for the most part. It's one of those problems where having these new capabilities through LLMs and other things allows you to solve them in a way that traditional machine learning and kind of just other kind of post Great Financial Crisis fintech tools really didn't let you do. So it's a couple different things. Also, the last thing I say is the cost of getting this wrong is gargantuan.
Right.
You can just Google or otherwise search, kind of money laundering penalties bank, and you will see a tremendous number of billion-dollar fines and 9-figure fines for financial
institutions. Also, the value of getting it right. Also, there's so much money at stake, right? So it's like both sides. Yeah, it's even incremental changes are very valuable in this because the numbers are so big.
Yeah, I think the getting it right is the more exciting part because the back to what I was saying earlier, a lot of the frustration of using any financial product is caused by these kind of other forces, one of them being regulation, that makes them suck to use. And you can really kind of stiff arm that problem in a lot of ways and make financial products delightful to use while the relevant kind of financial party is still complying with the law and not taking risks that are going to come back to haunt them down the road. They don't have to make that choice of having a terrible product that's compliant or a great product that's completely uncompliant. You can have both things. So that's the exciting thing. That's what all the companies want because it allows them to grow. It's part of them being able to acquire customers and give them a delightful experience.
Andrew, it's been fascinating to talk to you. Thanks for spending time with us here on the Tearsheet Podcast, and best of luck.
Thank you. It's great to talk to you, Zach, and really appreciate it.